How has HNI investing evolved over the past decades? I'm talking not just of the last 2-3 years, but I'm talking about over longer periods of time.
Well, I was fortunate to see the birth of the mutual fund industry in India. I think in 1995, people who were largely fixed deposit investors, I think UTI was or US 64 was the only investment product, so as to speak. And that also people thought was like a guaranteed return product. So I think from 1995, when the private sector took off in the mutual fund industry in India, I think it's evolved significantly. I think from mutual funds to PMS to AIFs to startups to international investing to ETFs to structured credit to venture debt, I think the HNI, the offering has evolved significantly. I would still say that in a platform or legal vehicle sense, a lot of the flow still goes onto the mutual fund side, partly because of the tax benefits available to investors, especially on the fixed income side. But I think now the PMS industry, the AIF industry has evolved significantly. I think the product set, including pre-IPOs, structured credit, venture debt, all of that has added to the kind of suite of products which are available for HNIs in India.
So how do HNIs approach the investments? I mean, are they also like retail investors and they're just concerned with rate of return on their portfolio, or is it?
No, I think, we would like them to approach their portfolio looking at their asset allocation and then looking at product selection thereafter. I would say that there is no one size fits all. Some people are more conservative and they would like to only do mutual funds, for example. Many people are more broad based. They're willing to try different asset classes and different products. So it's difficult to kind of say that there's a one size fits all approach. But I would still say that bulk of the investors that I see in India are fairly conservative in their approach. I think when the markets are bullish, everybody thinks the returns are guaranteed. When the returns are good, everybody's happy. Suddenly the markets take a turn. People ask the question saying, this was supposed to be X. How come it's much lower than that? So that's been the nature of the beast, but that's also part of our responsibility to educate people about investing in India.
Yeah, what's the asset breakdown like? I mean, is the largest portion still mutual funds, or now it's PMS, then AIF?
Well,
then
the
venture?
industry is largely mutual funds, right? I mean, while the PMS and AIF assets have grown, but compared to the size of the mutual fund industry, they're still small. So that's the way the industry is.
Yeah. So one trend which happened, I think, around about 3 years ago when the lockdown was at its, had just started. One trend that we saw, and I've had guests on the show talk about this, about how HNIs have moved from mutual funds to PMS, saying that we need more personalized service. I don't know whether that also means they're willing to take high risks. Do you think that, how is the trend shaping out? Is it done and dusted? And
well, I think that people started looking at PMS because PMS could do what the mutual fund could not do. You could take more concentrated positions. People thought it was a more personalized portfolio. I feel now it's increasingly become more commoditized. I think people are now saying that, listen, wherever I get a better return, if the mutual fund works, then it works. It may sound like a very retail kind of an offering, but if it delivers, why not? So I don't think that you can just say that the trend is very much in favor of PMS and AIF, but I think there are certain strategies that you can only do in the AIF. So I think that business will continue to grow. But I would still believe that the dominant vehicle in India would largely remain funds, because on the fixed income side, there is so much of tax benefit that the investor gets being in a mutual fund that it's difficult to look at any other non-mutual fund vehicle.
Yeah. How has the role of PMS fund manager evolved? Because the job of a mutual fund manager and a PMS fund manager are a little bit different. Do you think that the PMS product per se in the last 2 or 3 years has actually evolved to a changing need of the investor, or are they pretty much the same? You have a philosophy, you just invest, and that's just about it.
Well, if you ask me today, a lot of the PMS fund managers probably are more known. They have a public face. The mutual fund guys are probably sitting behind their desk. But I feel this is a function of the way the market is. In a bull market, all the managers are coming on CNBC talking about how their funds are doing and how much return they are generating. Suddenly the market turns, everybody goes into a shell. So I don't necessarily think that people should look at personalities when they make investments. I think they should look at the framework for each of the categories of vehicles and then make a decision in terms of which one works better for them.
It's very interesting because ultimately, sometimes I wonder it looks a lot like Bollywood because it's a star fund manager, star performers. The personality tends to get a lot of focus, and also probably thanks to social media also this has come up. I don't know what's been your experience.
Well, as much as the disclaimer says that past performance is no indication of future, I think the investors and sometimes even the managers believe that, listen, past performance is all that matters, because when the past performance is good, they are talking about their performance. When the performance is not good, then everybody goes in the shell. I really think that the time to be out there is when the performance is not coming through. What are the reasons behind it? And I think we have seen since October 21 that the market is, kind of in a range. And in my personal view, that is very much par for the course, because you had such a huge jump between April 2020 and October 2021. So if I always think that in India what happens is you suddenly get such huge gains in a short period of time, that then it's inevitable that it's difficult for the earnings growth to catch up with the kind of valuation. So right now there is a time correction that's happening, which is the reason you will see the market, in my view, being fairly range bound.
Yeah. What's your outlook on the wealth industry per se going forward from here? Do you think it's this as the economy grows, you'll actually see even better growth out here, or how do you see this in the next say 3 or 5 years?
See, we are quite bullish as far as the industry is concerned. It is fairly fragmented. What is happening actually is, from the outside, people think it's a very attractive industry. I also think that the barriers to entry in some cases is low. People think, okay, I'll set up an office, I'll hire a few people, I'll basically do it. But it's a game of patience, perseverance, long-term commitment. Because now with the change regulations, with the change fee structures, especially with the new regulations that SEBI is now proposing even on the AIF, it will take some time before we find profitability in these kind of ventures, right? So only people who have deep pockets or commitment to this kind of a business will basically stay. So there is opportunity. I think everybody thinks that they can just get in and be a wealth manager. I think there could be consolidation. We have seen 1 or 2 waves of consolidation. But the opportunity is massive. Like even today at 13,000, we've barely scratched the surface. So we think from 25, 30 bankers, we can easily go to 100 bankers in the next few years. But it has to be a measured, expansion, because the economics in the industry is not always, helpful from the point of view of the firm that is running the business. And I keep saying that India remains a market where the revenues are like a developing market, the expenses are like a developed market. Right? So that always creates this dichotomy that people say, okay, you pay me like a developed market banker, but I will only bring you productivity which is like a developing market.